Today, most of the people are discussing on adequacy of forex reserves for essential imports. Therefore, today's discussion is on external sector performance and monetary policy stance as per latest CBSL data. Economic activities are expected to be affected considerably by the ongoing supply shortages, energy crisis, and social tensions. Demand management policies of central bank and anticipated fiscal consolidation measures are also expected to keep aggregate demand subdued. Meanwhile, global economic growth is also expected to moderate in response to the tightening of monetary policies by central banks globally. Swift policy actions are required to strengthen the fiscal performance that would help avoid excessive reliance on monetary financing and maintain fiscal sustainability over the medium term. Furthermore, expeditious and transparent revision of tariffs in the energy sector remains a priority in order to strengthen the financial position of energy-related state-owned business enterprises. Guidance provided by the central bank to all licensed banks in the determination of the interbank spot exchange rate since mid-May 2022 is expected to minimize any excessive volatility in the domestic FX market. This and several other acts will have a positive impact on managing FX reserves. Moreover, these measures are anticipated to help mobilize FX to finance the essential imports until sizable bridging finance is made available. Earnings from exports exceeded 1 billion USD for the 10th consecutive month in March. Meanwhile, import expenditure recorded a notable decline year-on-year basis for the first time since February 2021. Tourist arrivals and workers' remittances showed a notable improvement in March this year. Foreign investment in CSE recorded the net inflow during March. This demonstrates the summary of external sector performance. Year-on-year basis, as at March, we can see that there's a notable improvement from trade balance. However, when we consider first 3 months of this year as against the first 3 months of the previous year, there's a deterioration. Cumulative deficit in the trade account during January to March this year widened to USD 2.4 billion. And also, terms of trade, the ratio of the price of export to the price of imports deteriorated by 16%. This shows the major contributory factors for the year-on-year increase in the trade deficit during first 3 months of this year. Mainly, decline in exports from tea-related proceeds has been contributed. Also, increase of import expenditure from fuel, textiles and textile articles, cereals and milling industry products, as well as building materials contribute to the import expenditure increase. Earnings from merchandise exports in March declined by 3.4%. A decrease in earnings was observed in agricultural exports and mineral exports, while an increase was recorded in industrial exports. Expenditure on merchandise imports, which has been falling on a month-on-month basis since January 2022, continued the decline, recording the first year-on-year decline since February 2021. Accordingly, import expenditure declined by 5.6%. Workers' remittances amounted to USD 318 million was noted in March 2022. Total departures for foreign employments were recorded over 26,000 during the month of March, contributed by the unskilled, skilled, and domestic aid categories. Tourist arrivals were recorded at over 106,000 in March. India, UK, Germany, Russia, and France remained as the main contributing countries for arrivals. Earnings from tourism in the month of March are provisionally estimated at 192 million USD in comparison to 174 million USD in the previous month. There were no transactions involving foreign investors in the government securities market in March. Meanwhile, CSE, including primary and secondary market transactions, recorded a net inflow of 10 million USD in March. This shows gross official reserves and reserve adequacy. As of March 2022, reserve adequacy is almost merely for 1 month. A middle rate to be announced during this month by CBSL based on the weighted average spot exchange rate of USD LKR interbank transactions with a variation margin on either side of the middle spot exchange rate. This measure, among others, is expected to help strengthen the exchange rate, thereby easing liquidity pressures in the domestic FX market. This graph demonstrates the movement of the LKR against major foreign currencies. As shown, rupee has continuously depreciated as against USD, Euro, Sterling, Yen, and Aussie dollars, and as well as Indian rupees. Market interest rates have notably adjusted upwards, reflecting the significant monetary policy tightening measures. The interest rates on deposits and lending products of financial institutions have adjusted upwards considerably, correcting some anomalies that prevail in the market interest rate structure. Meanwhile, the resultant expansion of broad money growth has been weighted down by the contraction in net foreign assets. It is envisaged that the elevated interest rate structure would attract more deposits into the banking system. However, the expansion of domestic credit, particularly to the private sector, would remain restrained. References for today's presentations are from Monetary Policy Review of Central Bank and External Sector Performance by Central Bank. Thanks for watching.